All right, we are still running. Um, I want to talk about a topic that's near and dear to a lot of homeowners: mortgage insurance. To all my brothers and sisters that are currently homeowners, congratulations. Most first-time homeowners initiate an FHA program to be able to purchase a home, and with FHA, you have principal, interest, taxes, insurance, and mortgage insurance. The fifth wheel. All right. So what happens is this is what you the lender. You explain mortgage insurance.
All right. Basically, mortgage insurance protects the lender in case anything happens with the loan. Let's say, God forbid that you lose your job, you can no longer afford your mortgage. The mortgage insurance doesn't really help you; it helps the lender. Okay, so it protects them from a loss, and that's basically what mortgage insurance is in a nutshell.
And it's not even a tax write-off.
Not even a tax write-off.
Yeah. So it has absolutely no benefit to you. It only benefits the people that wrote your loan. So at your earliest advance, you should attempt to ixnay the mortgage insurance. Now, can you give us some strategies on how to do so?
Absolutely. There's a couple of different strategies. This is one thing I do with a lot of my buyers. If I can get my buyers, especially if you have a little bit of money in the bank, if we go ahead and let's say we put you in a first-time buyer program. Mm-hmm. So if I'm able to give you your down payment and your closing costs, and let's say you have some money in the bank, or your 401k that you can borrow against, or your retirement fund that you can borrow against, we can take those funds and go with a conventional loan and buy out your mortgage insurance. Basically, what that means is that you're going to pay one-time payment with a discount. The down payment assistance program will give you a discount on your mortgage insurance.
Okay.
So we're going to take the money you have in savings, buy out the mortgage insurance on a conventional loan, okay? And now that's going to lower your payments probably $200 to $400 a month, all right, just by doing that one strategy. Because remember, we're giving you your down payment, okay? We're going to give you the money for most of your closing costs. So if you have anything left over, at least in savings in 401k, get rid of that mortgage insurance as soon as possible.
Yeah.
But let's say you don't have that money. Go ahead and use the FHA loan. You know, FHA is going to have mortgage insurance attached to all their loans, no matter what you put down. Whether you put 3% down or 20% down, FHA will always have mortgage insurance on that loan as long as you have a FHA loan. But the benefit is, number one, the rates will probably be a little cheaper than a conventional loan. Mm-hmm. The mortgage insurance is steady. It's not going to be too much, but it will be there. And remember, it's not a write-off. But at least it gets you into the house.
Yeah.
So that's the strategy. First step is to get you into the house.
Yeah.
Now, let's say 6 months pass by. And this is one of the things we always do with our clients. 6 months pass by, we're going to do what we call a mortgage checkup. A mortgage checkup.
Mortgage checkup.
That means I'm going to get back with my original realtor that helped you buy that home, which is Anthony. Anthony, I need an updated CMA report. And a CMA report is a tool that we use to see how much equity you built in your home over a certain amount of time. We're going to take that CMA report and see if we have enough equity in the property to refinance you from the FHA loan to a conventional loan, and then get rid of the mortgage insurance, because if we have enough equity, we can get rid of that mortgage insurance. Okay, and that's one of the strategies we use a lot, especially here in California.
Good strategy. Now, one of the complaints that I hear from people that purchased, like in the last, well, first off, let me say this: is there a year, like after 5 years, after 6 years? Or is it like an equity thing, like when you get below a certain percentage? Because I've heard that with FHA, mortgage insurance falls off after
No longer.
Okay.
Before the crash, they did. Before we had the mortgage meltdown, once you reach 79%, the mortgage insurance will fall off the loan. But after the crash, mortgage insurance will stay on the FHA loan throughout the entirety of the loan. Conventional loans, which is your Fannie Mae and Freddie Mac type loans, the mortgage insurance will fall off once you get to 79% loan to value. Okay. Basically, that's what the property is worth versus what you owe. And that's how it comes with the calculations.
Okay. Because like people that have purchased in the last few years, one of the main gripes is, even though they do have mortgage insurance, it's like, hey, my interest rate is 3.5%. Current interest is what?
In the fours.
In the fours, high fours,
High fours, low fives.
low fives. What do you do for that client?
Number one, we try to talk the client into maybe paying a little bit more down towards the principal if they're close to the 80%. But it comes back to getting with your realtor, like Anthony. Hey, Anthony, do a CMA report. Let me know if we have enough equity to get rid of this mortgage insurance.
Okay.
Now, if there's less than, let's say you have a conventional loan. Certain conventional loans have a time period. It doesn't matter if you have enough equity in it. It's going to have a buyout period. Okay? The buyout period might be 3 to 5 years. You might have to keep that loan 3 to 5 years before you get rid of that mortgage insurance. And if it's sooner, it might be a cost. Not a refinance cost, but it might be a cost to buy out the remaining period.
A prepayment penalty?
It works like a prepayment penalty, but it's towards the mortgage insurance, not the loan.
Okay.
So it might be, let's say your mortgage insurance is $300 a month. And let's say in order to get rid of this mortgage insurance, because you have enough equity now, it might cost you $2,500 to buy it out, for example. Is it worth it? And that's one of the things that's going to come back to Anthony with the value. If we see that's worth you paying the extra money to buy out the remaining time period of that mortgage insurance, I'm going to tell you to buy it out. Don't touch that first mortgage because you'll probably never get another loan with a rate like that. I'll tell you, never, ever, ever touch that first loan. If you want to do anything, go get an equity line of credit. But do not touch that first. Don't let anybody talk you into touching that first. Because our whole goal...
Keep that 3.5.
Yeah, keep that 3.5.
Yeah. And
go out there and get you a...
So you're saying that with the FHA, they can keep the 3.5 and then pay off
FHA is the only type of loan you can't. FHA, that mortgage insurance is going to be on that property for the life of the loan.
So sometimes, even with the mortgage insurance, it might still make more sense to keep the 3.5 than with the mortgage insurance than to go into a conventional without the mortgage insurance.
It's all about your situation. All right, let's say for example you got a couple of raises, and now your income went from let's say $2,000 a month to $4,000. Now you need some write-offs. I would tell you go ahead with the higher interest rate on the conventional. Get rid of the mortgage insurance. Your payments probably won't change much at all because remember the higher interest rate on the first. But you're only paying the mortgage. You're not paying the mortgage insurance any longer.
So even with the higher interest rate, now you have a write-off because you get write off your interest.
Exactly.
See, that's why people need to come to our consulting agency, man. That's ingenious.
Yeah,
that's
we have strategies. We have strategies out there.
Yeah.
It's just about getting the information out to the people. And that's our goal right now, is to get as much information out to you guys as possible. Because guess what? You have to ask questions.
Yeah. And what I'm going to do is I'm going to put Mr. Blaylock's information in the link. It's going to have his email address. It's also going to have his Facebook handle. You can direct message for a free consultation. Consultation free, right?
Absolutely.
All right, cool. We do a free consultation. It's open for anybody. The gentleman can handle somebody from Wyoming to Wisconsin to Watts. So I want to thank you for spending this time with us. Wealth of information. I think that people are gonna love this interview. You are showing every bit of your 19 years in the industry. Because those are things I didn't even think about. So I'm Anthony Tullis, Millionaire Mindset. Thank you for tuning in. Link is in the description below.